Welcome. We'll get started shortly. Before we begin, here's how to earn continuing professional education credit for attending this session. There are no polling questions or attendance checks. Instead, you will demonstrate your knowledge by taking a brief multiple-choice quiz using the Earmark app. Visit earmark.app in your web browser. You can also download the mobile app by scanning the QR code on the screen. Log in, or if you're new, create your free account. Be sure to use a valid email address because that's where we'll send your course completion certificates. From the home screen, scroll down to find the course. You can also tap the magnifying glass icon to search for the course. Tap on the course artwork, then the Enroll button. On the Course tab, you'll find the recording and quiz questions. Complete the quiz to earn your CPE certificate. It takes us a few days to create the course on the app, so if you are attending this session live, please wait a few days. We'll email you a link to the course when it is ready. If you have questions or need help, email us at support@earmarkcpe.com. And now, on to the event. Hello, everyone, and welcome back to Earmark. I'm Blake Oliver, CPA, and today we're going to talk about small business cash flow insights, navigating challenges, data-driven insights for accountants, and I'm pleased to be joined by Deanna Zubrickas from Relay. Deanna, welcome to Earmark.
Hello, Blake. I have to say, I love being referred to as the event. So this is awesome. Thank you for having me. I feel like a celeb being on Earmark for the first time.
Deanna, one of the things I love about working with Relay and about your background in particular is that you have a real small business background. You worked in retail for a number of years before you went to Relay.
I did, yes.
So you must have learned a lot about, managing people, managing cash flow in a retail environment, and I also did that, not in retail, but actually in food service. I worked at Starbucks for a year after college, and I feel like it was such an incredibly valuable experience to me now as an accountant. I'm curious, like how has that informed your work at Relay?
It really gives you a crash course in a little bit of everything. And I think anytime you see, a candidate applying for your firm or wanting to help with your business that has food service or retail on their resume, it's like, please take a serious look at what they have to offer because they know a little bit of everything. And having to juggle so many different things, whether it was payroll, HR duties, scheduling, the actual daily, hourly goals of the team, what's coming in, what's going out. There's never been so many different balls in the air for me. And so I can definitely relate to what small business owners tend to face on a day-to-day. And I gotta tell you, it is not easy.
No. It is not. Yeah, I agree. As a former small accounting firm owner, I dealt with a lot of HR and cash flow issues myself, right? When we are getting our fees from clients and we have this very large payroll relative to what we earn that we have to pay out every couple weeks, it can be stressful. And so we relate to these challenges, and the Relay team has released a really cool report that we're going to talk about with a lot of interesting data in it. But first, Deanna, I would love if you could tell us a little bit about Relay. And I also want to welcome all of our live stream viewers. Please feel free to post comments into the chat wherever you are. If you're on LinkedIn or YouTube or in StreamYard, we would love to hear from you and answer your questions as we go. So Deanna, first, let's talk a little bit about what Relay is.
Yes, for anybody that this is their first time hearing about Relay, I am really excited to be here, and we definitely want to dig into the cash flow compass report with everybody today, but a little bit on us first. So we were founded in 2018 by co-founders with a long track record of working in payments with small businesses and with small business advisors. We serve all of the United States, and we do not have any physical branches, so we are 100% virtual. And we're partnered with Thread Bank, a bank that has been around since 1925. And through Thread, all of our accounts are FDIC insured. And something that should always go notice about Relay is we are the official banking partner of Profit First. So I always love to mention that part.
And I should mention this. It's one of the reasons I love working with Relay is that I use Relay for my own banking. both my S corporation, this Earmark itself, the media business, the app. We do everything on Relay, and my favorite thing is being able to see and switch between all those entities with one login. So thank you for that, Deanna.
Yeah, exactly. And everybody, Blake is here, hosting as Earmark today, but as a real live Relay customer. So everybody just remember that today.
Happy to answer any of your questions as a Relay user myself.
Exactly. And he'll give it to us straight, everybody. So don't worry about that.
That's right. I give my feedback to the Relay team, and I like to, as the accountant community advocate for Relay, I like to get that feedback from you and translate that into actual, what the product people need to hear from accountants. So send it my way.
Exactly. Send it his way, and Blake will send it our way.
Yep.
Now, I want to talk about the huge challenge that many businesses face, but it doesn't always get the attention that it deserves, and that's cash flow. For most small businesses, cash flow isn't a rare concern. It's an ongoing, everyday struggle that can even threaten their survival. Now, the reality is that many business owners don't have a clear picture of how much money is coming into their business each month, and often don't know exactly how much is going out either. This lack of clarity can lead to a major financial strain, and many small businesses will face some kind of cash crisis over their lifetime, and most don't have enough savings to cover a sudden drop in revenue. Without a financial cushion, a revenue shortfall could force some businesses to close or rely on personal funds of the business owner just to stay afloat. Now, seeing all this, we really wanted to dig deeper to really understand these challenges. And that's why Relay put together the Cash Flow Compass report. Now, by surveying over 750 small business owners and managers across the US, we got a really up close look at what cash flow looks like in the real world and what's causing them, the issues, what impact they have, and what business owners are doing to manage them on a day-to-day basis. This report brings those findings to light and helps us understand how we, as advisors, can be a resource for small business owners as they tackle all of these challenges. Now, we're going to dive into some of these findings in more detail, but what we learned at a high level is that cash flow challenges are practically universal. 91% of small businesses are dealing with them. But on top of that, a lot of business owners think that they have cash flow all figured out, even when their finances actually tell a different story. And this doesn't just impact the business, it impacts the business owners personally too. Over 70% reported feeling real anxiety or burnout over cash flow issues. So it's not just a business problem, it's a people problem. What we're hoping today is that these insights will help you offer even stronger advisory services to your clients, helping them get a handle on cash flow, reduce financial stress, and feel more secure in their business decisions. I think you're going to find a lot here that'll make a real impact for your clients. So let's dive into some of the findings here.
Yeah, Deanna, that 91% number is a lot. It sounds like a lot, but based on my experience, having worked with hundreds of small business clients, it rings true. Mm-hmm. I mean, it's the biggest challenge that they faced, and it created, I think, the most stress for them. And for me, when I was starting out in public accounting, I had a hard time figuring out how to address it, and so I'm eager to share some of my insights from my experience as well.
Absolutely. And I think even though this statistic is quite scary to look at, 91% of small businesses, it also lets business owners know you're not alone, right? You are not the only person facing this. There are tons of people experiencing the same day-to-day that you are. So let's kind of help everybody together if we can. So let's start with one of the biggest findings from the Cash Flow Compass report, and that is 91% of small businesses face cash flow challenges. And this means that almost universally, small businesses struggle with keeping a steady cash flow, regardless of their industry, location, or even their size. And we found that the top reasons behind these challenges include rising labor costs, seasonal revenue fluctuations, and late payments from clients. And it's easy to see how these factors can pile up and disrupt a business's day-to-day operations. What this stat highlights is just how widespread and persistent cash flow issues are and why they are such a critical area for improvement.
And Deanna, I want to highlight 3 of those issues you mentioned. Rising labor costs, that's a big issue here in the United States. And as accountants, as CPAs, we have a huge opportunity to help clients control those costs, to manage those labor costs, to budget for that, but also, very importantly, to price properly, especially when it comes to professional services. We've heard for years that just in our own firms, accountants are not necessarily charging our full value for our services. And so when we look at the labor costs, it's really important to analyze those and to make sure that you are marking up those costs, but ideally charging the true value of what you deliver so that you can capture that. The other thing you mentioned seasonal fluctuations. This was, I think, the biggest issue for one of my largest clients when I had my small accounting firm. It was a seasonal tutoring business. And so not only did they have to be concerned about labor costs with a mix of full-time and part-time employees, it was really challenging. Basically, around this time of year, every year, we would start having conversations about, well, what is the partner draw going to be? Because there were 3 partners and they were trying to plan for the holidays, for Christmas presents for the families, for what trips are they going to get to take? How are they going to enjoy the fruit of their labor, right? And I didn't necessarily have the tools at the time, 10 years ago, to help with that. I had some ways of doing it we'll talk about as we go through this, but I didn't have a relay. I didn't have that. It was all the money in one operating account. And so when we looked at that number, that was a real challenge because there might be what looked like a lot of money in that account. And my job as the accountant was trying to help the partners of that business understand that, well, that's not all your money, right? We've got to set that aside for taxes, for the quiet period, right? The seasonal period where we're not going to have as much. And it can be hard going into that. It can be hard coming off of a really good time of year. You want to take the money out as the business owner, but you also need to plan for that, quiet time. And for us, that was like in the summer, right? Coming out of school, people don't want that. The other last point you mentioned was late payments. And that was, of course, the issue that we had when we didn't maintain the cash reserves is then we would not have enough, and we would occasionally, it would happen, we'd be unable to make an important payment, and that would kind of mess things up and incur late fees and that sort of thing. And then you have to borrow money, which comes out of future profits. So we want to, as accountants, be proactive with our clients. We want to use tools, whether that's spreadsheets or apps like Relay, or ideally a combination of the two. We want to use that to be proactive. And then we want to be able to position ourselves as the experts who can help with these issues. That's a lot of people. 91% of small businesses face these cash flow issues. So that's a big market for our services. We can help, and we can create more value when we do that. So I'm glad we started with this stat, Deanna. It's a big one, and it's an important one.
Yeah, it's definitely an important one. And it actually brings an example that I spoke to an advisor about recently, who she's on Relay, her client's on Relay, and the specific client does marketing for the election. And obviously her business has skyrocketed the last few months and needs to be able to make that work for the next 4 years until the next one comes around. And so they're looking at building exactly what it looks like. That's a very unusual flow, right? Every 4 years
Yeah,
being
4
having a
years is
huge
a
spike.
long cycle. Yeah,
Yes.
yeah.
Yeah, I know. It's like not a widespread example here, but
Yeah.
they feel quite confident being able to view exactly what's happening within Relay to be able to prepare that. So, hey, if a business like that can do it, I think we all can, right?
Mm-hmm.
Yeah.
Yeah, that's amazing. Yeah.
Yeah. Now, our next example here. So we have uncovered what we call a cash flow confidence gap. And business owners on average are 42% more confident in their cash flow control than reality justifies. This statistic reveals that many owners feel secure about their cash flow, but don't actually have the insights or structure to back up that confidence. Now, this overconfidence often leads them to make decisions that can leave them exposed to cash shortages, like committing to expenses without a clear sense of cash availability. Essentially, this gap between perception and reality really highlights the need for better cash flow visibility and structured management so owners can make more grounded decisions.
Mm-hmm. And this stat fits perfectly with my experience, where coming off of the busy season, we'd have a lot of cash in the account. Partners, the business owners would feel great. They would be very confident, and it was my job to help, bring them just slightly back to reality, right?
You're their
Um,
reality check.
yes, and that's tricky to do, right? Because you're saying, well, I really know you want to take the account down to like the minimum that we need to operate it, but let's just take a look at where you were last year,
Mhm.
and keep maybe like let's increase that reserve account, right? Um, so there's kind of two situations that we get that's related to this stat that I want to talk about. First is we get clients that come to us in a crisis, right? They can't make payroll, for example. That's kind of the biggest crisis
Mhm.
that I've seen. And so when that happens, we just have to solve the problem, right? We have to step in and help. But we cannot forget after we do that we need to help them prevent it from happening in the future. So that's a big opportunity to start the conversation. And what I like to recommend, and what I started doing with my clients that I recommend every CPA offer, is regular cash flow check-ins.
Mhm.
What does that look like? It doesn't have to be a huge amount of time. It could be a 15-minute per week, maybe 30-minute block on the calendar where it's a video call. You get on with the client and you check in on the cash flow. And it could be as simple as just opening up Relay and
Mhm.
looking at the balances in the accounts and making sure that we've got the right allocations. And that's it. And that could be very quick. It's also an opportunity to address any other issues that are going on in the business that might lead to cash flow problems later. Whether that is, hey, I just hired a bunch of people and now we need to plan for that. Or it could be, I just expanded, or I want to expand.
Mhm.
All of this stuff is ultimately related to cash flow, but it happens a long time before. So if we start talking to clients regularly and make that a part of our services, we create more value and we help head these problems off before they become problems. So you also may have a bunch of clients where they don't have an immediate crisis.
Mhm.
So in that case, this is a stat that I recommend sharing with all your clients. If you have a newsletter that you send to clients, regularly communicate. Doesn't have to be complicated. Just emailing them this kind of information can be helpful. And you can use the stat, the one before and this one, to say, look, there is a disconnect. And if you don't feel totally confident in your cash flow, I'm here for you. Let's do these weekly cash flow meetings. Now, you don't want to just add that in for free. You want
Mhm.
to, get compensated fairly for what you're doing. But if you think about it, right, 15 minutes a week, maybe you stack up these on one day a week for a select group of clients who really need it. it could be a great way to build stronger relationships with clients, and you don't have to have a ton of time in your schedule to do it. A few hours a week is really all you need to get started offering this. So if what you're doing right now is meeting with clients on an annual basis or a biannual basis, think about the ones who might benefit from a weekly relationship. And there's so many ways that you can use a tool like Relay to help with that, make it less time consuming, allow you to offer the most value in the least amount of time. That's what we want to do.
Right.
And before we move on, Deanna, to our next stat, I want to highlight a comment from one of our live stream viewers. John, welcome. John says, are you seeing more upfront payments required for services and more clients use more buy now, pay later, such as Affirm? Oh, I've never been a big fan of the buy now, pay later, John, because it creates a problem where we feel like we can afford something when we may not be able to do it. So personally, I've avoided using this myself, but I do know from looking at the stats, from watching companies like Affirm, this whole buy now, pay later business that has developed over the last few years, it's growing a lot. And I think actually that could be contributing to this statistic. So when you buy now, pay later, right, you spread out those payments over 6 months, perhaps. And so if you start stacking those up, suddenly that's a big chunk of your operating cash flow that is now going to buy now, pay later payments for stuff you already bought a while back. So we want to avoid clients using that. And actually, if you see clients starting to do a lot of that kind of individual financing, I think it's a great opportunity to start a conversation about, hey, let's create your own buy now, pay later account, your own layaway account with Relay. And that way, when you need to make a purchase, you have the money and you don't have to borrow it at these crazy interest rates, which are all hidden in that. So Deanna,
Right.
have you seen that as well in when you talk to accountants?
I have not seen a bigger interest in the buy now, pay later. What I have seen is kind of what you were describing, like how do I talk to my clients about this, and how do I add this without it being a huge lift to my firm? And back in September, I was at another advisor conference, and we first shared this information, all these stats, to the audience. And the amount of people that every time we changed the slide to a new stat, got out their phone and snapped pictures of all the stats, because I'm sure they were thinking, this is exactly what I want to now communicate to my clients, whether it's in my newsletter, my own slide deck. So feel free to use this to help start that conversation or bridge that gap.
Yeah, I think part of the issue is that we don't like to talk about money in this country. I don't know if this is a global thing or if this is just a US thing, but people are actually more comfortable talking about like relationship problems than they are about money problems.
Which is so funny because they're equally as personal, right?
Right.
Yeah.
People would rather talk about politics at Thanksgiving than money.
Yeah.
And so I think that's how we've kind of gotten into this situation as a small business community, is that if we don't talk about it, if we aren't comfortable talking about it, then it can become a problem. So sometimes just letting people know they're not alone is really helpful. So let's move on to our next stat here. 31%.
Yes. So another finding that really stood out for us was that 31% of small businesses reported missing or being late on a major payment in the past year. So these payments included essential expenses like your rent, supplier bills, and even the owner's own salary. Really, really hate to see that last one. Now, missing these payments has serious consequences, of course. Not only can it impact relationships with your suppliers and landlords, but it can also disrupt the owner's personal finances. For many businesses, these missed payments are a sign of reactive cash flow management rather than a proactive approach. And this stat stat underscores the need for structured cash flow systems that allow businesses to reliably cover their most critical expenses.
And as CPAs, we can definitely help our clients avoid this issue. If it's payroll, if it's the owner's draw, those are probably the two that hurt the most.
Right.
And they're really the same thing, right?
Mm-hmm.
Because payroll is for your employees, the owner draw, that's for you. We want to set up our businesses so that we don't have to sacrifice that. And there's two ways that I like to handle that. The first is just setting up a cash management system that gives me visibility. So that means using a tool like Relay to set up multiple accounts.
Mm-hmm.
And at a minimum, I recommend that every client has an operating account, a payroll account, and a savings account. That's as simple as it gets. And that payroll account needs to get filled up every pay period. That savings account needs to be targeting a minimum balance, which we'll talk about as we move forward. I'm a big fan of the 3 to 6 months of savings concept, and we want to get clients there. They're not, as we'll learn. And then you can get a little more sophisticated with it. Cash flow forecasting. Now, when I say cash flow forecasting, I'm not talking about some super complex tool. There are a lot of great apps out there that you can use for this, and for some businesses, those are great. For most businesses, all they really need is a very simple spreadsheet. It can be 4 weeks out, listing upcoming bills and payments, listing out, the expected payroll, the next 2 payrolls, the rent payment, the owner draw, that sort of thing. And what I would do is I would go into that once a week with my client. I'd usually do it before the meeting, and I would update the balance on that spreadsheet, update the dates and the upcoming payments, roll it forward, essentially. And we would be able to see, okay, 3-4 weeks out, next month, here's where our balance is going to be. And I would also, of course, project in, revenue. I'd look at last year, if it's a seasonal business, and say, okay, here's a conservative estimate of what we're going to bring in each week over the next few weeks. And that really simple spreadsheet might only take me 10 minutes to update, but creates a lot of peace of mind. And if there is a cash flow issue, it helps us prioritize the payments. Right. What are we gonna hit first, right? What can we delay? Can we ask for an extension on this payment? That sort of thing. So it creates an early warning system. And sometimes in order for a client to see the value, you might have to just do that for them. And you say, look, I want to create this for you. This is for you. If you have a template, it's not that hard to put together. And you could say, look, would you like me to meet with you weekly and update this with you? That's a service that we offer. And that opens the door to those ongoing advisory services that we really want as accountants for ourselves, to create, a less stressful firm and to have more, basically fewer clients with a tighter relationship, creating more value. All right, let's move on to our next stat, Deanna. Okay. 71%. And this is the one. I think actually this is probably the most significant statistic, because we don't talk about mental health, I think, enough in small business. It can be really stressful.
Agree. Definitely agree with that. And business owners are often not putting themselves first. And I think that focus of the business going first or everything else going first definitely puts their own mental health in the back seat, if they're at all, right? So this next stat is a reminder that cash flow issues don't just affect a business, they affect the person running it. And our report found that 71% of business owners experience some form of personal stress due to cash flow issues, whether it's anxiety, burnout, or disrupted sleep. It's really an eye-opening finding, because it shows us that cash flow management isn't just about keeping the business afloat. It's also about preserving the well-being of the owner. Financial stress can quickly become overwhelming, and without support, it can take a serious toll on both the business and the owner's mental health. This finding highlights the value of structured cash flow management as a tool to reduce personal stress. So when you are deciding to offer this as an advisor, you are going beyond the business and making an impact here.
And it's a reminder that we are not just protecting the business, but we're protecting the well-being of the people in the business.
Yeah.
And there's a really big opportunity for accountants to position, to market what we do, not just as a compliance activity, not just as I put the numbers into the forms, I file your return, I reconcile your books. Those are all things that have to happen. But what creates more value is when we say, look, if you're working with me, I'm going to help you be stressed less.
Mm-hmm.
I am not just helping you get done what has to get done. I am a stress reduction solution.
I like that.
And I see leading firms market what they do in this way. And there's a lot of different ways to say it, but I think you get the idea that it's about creating peace of mind. That's another way that I've seen firms talk about this. Proper planning creates peace of mind. You can see where you're going to go. You can avoid issues before they happen. So there's the part about, let's not miss payments. Let's not miss payroll. Let's feel confident in our short-term cash flow. But then there's also, let's plan for the future. Where do you want to go with this business, right? What are your goals? What are your dreams? And so a lot of times that involves creating separate plans for personal and for business. I mean, it's people who do tax planning understand this.
Mm-hmm.
And you can combine that, I think, in a firm with cash flow management. And it's basically holistic planning, not just planning for this one tax line on their personal income statement or their business income statement, right? That's just one expense. We want to do it all. So think about this a lot. I would dwell on this stat. How can we help our clients have better mental health? And it might feel strange, I think, at first to talk to clients about this because we're used to talking about the numbers, not about how they're feeling.
Right.
But once you start talking to them about how they're feeling, you will be amazed because, business owners, it can be very lonely.
Mm-hmm.
They can't talk to their employees about this. If they do, they'll stress out their employees.
Right.
So you might be the only person other than their therapist, if they have one, who they can actually talk to about this stuff. And trust me, their therapist isn't going to understand the numbers. So you're honestly the best person for it.
Right. And I think what I've seen with a lot of firms, Blake, is the ones that have the most success or, end up with more client referrals are the ones that do take a more personal approach to the client relationships that they have. And, there's that age old saying, like, you'll forget what people say, but you'll never forget how they make you feel. And if you are positioning yourself as a firm that is a stress reduction solution, your clients will feel that when it is working. And that is going to, that's going to mean so much more, both personally and professionally to that client and your firm than any cash flow report or anything else ever will, right?
And you and your staff will feel better about what you do. It's really wonderful to see the improvement in somebody's life from getting a handle on this sort of thing and being able to do what they love and not stress out so much because entrepreneurship, it can be a roller coaster.
Absolutely.
All right, let's talk about this stat here, 62%.
Yes. So 62% of businesses experienced negative outcomes directly due to cash flow problems in the past year. These negative outcomes include missed growth opportunities, delayed projects, reduced employee hours, and even losing clients. For many businesses, these disruptions are obviously more than just inconvenient. They're roadblocks to growth and long-term stability in the business. This stat really highlights how cash flow issues don't just stall day-to-day operations, they can actually hold a business back from growing. And it's just a reminder that better cash flow management doesn't just keep a business running, it creates more room for it to actually thrive.
That's right. Because if you don't have that cash reserve set aside, you can't take the opportunity. You might miss the opportunity to make the investment at the right time. It's sort of like investing. If you don't have a cash reserve as an investor, when an investment comes along, when an opportunity comes along, you can't take it. And it's kind of the same thing when you're running a business. So we want to position our services as preventive medicine versus emergency room visits. Emergency room visits, they may solve the problem, but they're very expensive, and then you're back where you started. Whereas preventive medicine, which could mean diet and exercise, which is kind of how I view cash flow management services, this advisory service, it prevents us from getting to the point where we got to run to the ER. It identifies issues before they escalate. And so like I've said before, those specific solutions that help you get there are those weekly cash flow meetings, reviews, and then also quarterly strategic planning sessions. And I would recommend when you create your package of services or when you review it, is think about how can I incorporate that into my advisory services. And maybe you have a few different options. So at the very basic level, we meet quarterly and we look at where you want to go. And I give you some pointers, I help you plan, but you're going to manage the cash flow. And then at a higher level, the business is bigger, the owner just does not have the time. Maybe that is where you're doing the weekly. So it doesn't have to be a one-size-fits-all kind of solution, and you can offer different services at different time commitments and different price points that fit all the different businesses that you work with. All right, let's talk about this one, the bank balance, the management of the business by the bank balance.
Yes, and this is another very high stat, but I don't want it to be as scary as the first one that we started with here. So I do think that this stat is especially interesting. While 95% of business owners check their bank balance every day, only 24% are using multiple accounts to actually organize their cash flow. So this means that nearly all business owners are watching their cash flow closely, but most of them aren't actually getting that detailed view. Without multiple accounts, they can't easily distinguish between money earmarked for expenses, for taxes, and for profits, which leads to an inaccurate understanding of what funds are actually available within the business today. This finding shows a huge opportunity for business owners to structure their finances in a way that actually gives them a clearer, more organized picture.
Yeah, it's the difference between looking at the numbers and understanding them.
100%.
You look at that bank balance and you see a big number, and as a business owner, you think, this is great. I've got lots of money. Let's go spend it.
I'm rich.
Right? It's the same thing that happens in our personal accounts, right? You see your personal checking going up, and then you're like, ooh, time to go to the mall, right? I've been guilty of that recently. And so for me, I use multiple accounts personally. I fritter away a chunk every single month into a brokerage account where I can put it into safe investments. And in that way, it's not available to me. I have to wait a few days to transfer it back in order to spend it. So I don't see that in the single account. I know a lot of people use that strategy. I didn't invent it, and it works great. And I think we should apply that same logic to businesses. And as CPAs, we have often discouraged that with our clients because when they have a lot of accounts, reconciliations become a huge hassle for us. But that is a problem that does not have to exist anymore, because if you use a modern bank like Relay, you can connect directly to the accounting system, QuickBooks Online, Xero, and the transactions go in, and those bank feeds, they are good. Like, they are solid. I can tell you, I have not had a single missing transaction or duplicate transaction in the years that I have been using Relay. So we can rely on those bank feeds, which means the reconciliations can be nearly automatic, almost instant. So I don't care if a client has one bank account, 3 bank accounts, 5, 10, 20. We do still run those reconciliation reports, but we don't have to worry that the numbers we're looking at in the accounting system aren't right. So maybe we can reconcile a little less frequently, which allows us to keep the time the same. So, like I said, I recommend at least 3 accounts for every business. But depending on the business, you might want to have them set up quite a few. And so for project-based businesses, where one of the big problems is that they have a budget for the project, but they struggle to stick to it because there's a lag between the expenditures and the accounting, they can actually manage it themselves in Relay by setting up an account for that project, funding it with a specific amount of money, and then visually, the business owner can see where they're at instantly without having to go to you or wait for a monthly financial statement to find out. And I think that's a great compromise. I know that we can do all of this with accounting. We can do all of this in QuickBooks, but it's delayed. It's not possible to do it on a daily basis for most clients. And so then they get the information too late to really act on it. But if they can do it in the bank, which they have access to, it creates a lot of reassurance for them. And you can do it, Deanna, with the cards, right?
Yeah, absolutely. So I think the project-based is a great example. Like if you can tie individual cards directly to different checking accounts in Relay, and they can be virtual. Like if this is a 1 month project and you know it's not going to have a life beyond that, create a virtual card. You can terminate it whenever you want, restart a new one, but you can track exactly which expenses are coming out of each of these checking accounts, but also which employee is doing them. And another layer that we've added on top of that recently at Relay is the receipt capture option too. So you're able to request those receipts. So even though different projects or different things are happening within the business, it doesn't mean that you have to get any more unorganized about it. And what's really exciting about that too, and actually, Blake, I don't know if you know about this, but we launched the feature without our integration to QBO and Xero, the receipt capture, but we're actually in beta testing for it right now. So soon, all those receipts are going to be available in your accounting software too.
I have access to the beta.
Amazing.
And I've done it. I've snapped a picture with my phone, attached it to the expense, and then later I can actually go into Relay and I can categorize it.
Love it.
And sync it into the accounting system, basically pre-reconciled or pre-categorized.
Amazing.
So then it's just a matter of saying accept, right? The match. And that's pretty cool. We can actually offload a lot of the work of pre-accounting or bookkeeping to clients. And they have to do this anyway, right? They have to collect the receipt anyway. So to say add a little bit more information is not a huge ask, and it saves everybody a ton of time because we're not going to ask it later.
Yeah, exactly.
So it's sort of like I want every client to have the benefit of daily accounting. When I had my firm, because I'm an accountant, I would go into my accounting system and I would reconcile the books every single day. And so I knew where I stood at every moment. And when I was starting out, that was really important because I did not have a lot of capital and I had a lot of people I was hiring and I had a lot of clients I was bringing on. And that gave me a ton of peace of mind. Unfortunately, for most small businesses, it's just not possible to offer that at a price that they can afford when they're small. So Relay gives the benefits of that kind of daily look, being able to see the money in different accounts, stuff that you would, categorize on a balance sheet, but in a way that they can do it themselves. and then we as accountants can layer on to in our advisory services. And I'd be happy to answer any questions from our audience about that methodology if you'd like me to explain more. But right now, let's get to our last statistic here.
All righty. Our final stat today, really speaks to just how tight cash reserves are for many small businesses. So 43% of business owners would have less than 30 days worth of operating expenses if no new revenue came in. And that means that nearly half of all small businesses are only 1 month away from a cash crisis if revenue stalls. This lack of a financial cushion leaves them obviously very vulnerable to disruptions, from seasonal slumps to unexpected expenses. This stat highlights the importance of building cash reserves as a buffer against tough times, allowing businesses to stay afloat even when revenue is unpredictable.
This is not surprising, considering that most individuals in the United States live paycheck to paycheck.
Right.
And I am not saying that is a bad thing. That's like, we want to get away from that. If you are in that situation, that's very typical, actually. And I think as a small business community, as a community of advisors, the number one thing that we can do to create peace of mind is to help extend this beyond 30 days. The rule of thumb in personal finance is that you should have an emergency fund that can cover 3 to 6 months of essential expenses. 3 months if you have a very stable kind of job. Perhaps you are a dual income family. 3 months is good. If you have a less stable situation where you're an entrepreneur and income is not regular, the recommendation is 6 months. So that's quite a ways to go, from less than 30 days, from like 1 or 2 payrolls, up to 3 to 6 months. Every business, I would love to see 90 days of cash reserves. So the question is, how do we as advisors help them get there? And I like the automated transfers in Relay. It's like my favorite feature, Deanna. And if you haven't seen this and you're watching or you're listening, I recommend you check it out. So what this allows you to do is create a rule. And the way I like to do it is I have an income account for each entity. So this is where all of the checks, deposits, ACH deposits, electronic transfers, wires, they all go into that one account. That's the account number and routing number that I give out. And then I create a rule in Relay that says, take X percent of this money and put it into this savings account. And it's on a daily basis. So whatever comes in that day, Relay at some point in the middle of the night says, okay, here's $1,000 in the income account. Let's make it $100. It's easy, percentages, right? Here's $100 in the income account. I'm going to take $20 and automatically transfer that over to the savings account. And I'm going to take $80 and automatically transfer that over to the operating account. And you can actually make this more sophisticated if you want, right? If you have a payroll account, if you've got a tax account, you can set whatever percentage transfers you want. I think you can also do it on just a dollar amount. Is that right, Deanna? I've always used percentages, but I think
you can do dollar amount manually.
Okay.
Yeah.
So you can set percentages and you can just automate that. So this is something that we could never do before as advisors, because we had to go into the bank account every day and we had to move the money. Mm-hmm. And that's time consuming to do. But if you can automate this for clients, it's great. They're building up that reserve automatically without even thinking about it. Set it and forget it. So that doesn't mean your client can't access the cash.
Yep.
You can set this up now, and if they need the money, they can go transfer it from the savings. But that creates a trigger then to have a conversation. Okay, what are you doing in your business that is not allowing you to set aside this profit? That is not allowing you to set aside this estimated tax payment? And you can see that then when you go in and reconcile the books on a monthly basis. It's sort of a warning system, early warning system. So let's recap our takeaways here, right? I am really big on setting up a modern cash management system for clients using multiple accounts to help them visually see in their banking what money they can spend and what money they need to not touch, whether that's estimated tax or payroll or just savings or their profit. And by the way, if you use Profit First, if you're into that methodology, Relay's totally compatible with it, right, Deanna? You've actually worked,
yes.
You are partnered with Profit First, right?
Yeah, I would go beyond compatible. I would say made for anybody doing that method, because we just innately, Relay has always had the ability for, all the accounts that you want and create them whenever. But once we started really gaining a huge following of Profit First users, just like you said at the beginning of the call, Blake, is we take the feedback and can implement it. So that's actually where the auto transfer rule feature came from, was these businesses needing something like that. And hey, we wanted to be the one to bring it out.
That's fantastic. So whether you are a Profit First professional or you like that methodology or you just use some of it, I think we should all be using at least a little bit of it.
Yeah.
It's possible with Relay. Use these stats to educate your clients. Send them this. It might make them actually feel better to know that they are not alone, that 91% of businesses are struggling with cash flow. And there's also another stat that's been out there for a long time about how, most businesses that fail, small businesses, it's actually not because they're not profitable. It's because they don't have enough working capital and they don't manage the cash flow properly. So that's where we can really help them survive and thrive. So when you build your services, or let's talk about marketing yourself first, right? When you sell your services, you want to position yourself as a cash flow advisor, someone who can offer peace of mind, preventive medicine, prevent problems before they develop, help your clients achieve their goals by helping them save for them. And tactically, how you do that is by offering regular cash flow reviews. I love weekly because so many things come up weekly that you can not only start the conversation about here's when we're going to pay that bill, but also what is happening in the business that week. And that always ultimately results in changes to cash flow projections. Quarterly meetings to go over strategic plans. And let's, as advisors, support our clients' mental well-being. Let's not be afraid to have those conversations and to, give them that peace of mind. So, Deanna, there's a lot more in the Cash Flow Compass report. If you want to get your own copy, just scan the QR code there on the screen, and I am going to put the link, the URL, in the chat here for everyone who is watching live.
Yeah, we just scratched the surface today, so lots more to read in the actual report.
Yeah, that's like page 4 of the whole thing. I think it's like 16 pages. So it's really good insights there, stuff you can use to think about how do I want to position my firm? How do I want to show up for clients? So we've got a few minutes left, and we would love to take your questions. And Michael asked, how has that amount changed since interest rates increased the past few years? I think Michael is referring to probably the percentage that I was talking about.
I think so.
And that's going to be different for every business. If you're just starting this out with a client and they've never done like automatic savings, it can be really small to start. I think the Profit First guys say, look, just make it whatever is manageable, a few percent, and then gradually increase it over time. And it's that sort of philosophy that, right, like you just want to turn up the heat a little bit, right? And then you get used to it. So it doesn't have to be like 25% to start or 30% to start, which is probably what it should be ultimately. It can be just a little bit. All right. Here's another one. What are some quick wins or first steps I can take to help clients with cash flow management? Deanna, in your conversations with advisors, have you heard of any good quick wins?
The quickest win, I think, is asking them, or you already know how many bank accounts they're using, the second or third that they might. If you have someone who has the bare minimum, that one single account, the easiest thing they can suggest is similar to what you said earlier, but having a tax account or having a payroll account. Those are the quickest wins that you can start, just to start changing that mindset for the customer of, we need to start separating funds. And then eventually you can get more specific about it and more tailored to that business. But just switching that first one, I think, is the quickest win that I've seen so far.
And I think that relates to another question we got, which is, if a client is in denial about their cash flow issues, how can I help them see the bigger picture? Well, these statistics might help. That's for sure.
I think the overconfidence one specifically.
Yes. But, I think also it might be that they're looking at that bank account and they're seeing that one number. Mm-hmm. So breaking that down for them can really help.
Yep.
So, if you're sending out those estimated tax slips and not really talking about it with your clients, and then they end up owing money every year, maybe build that into what's in their operating account. Hey, by the way, here's what we've planned for estimated taxes. And so that money is not really available to you. Don't think about it that way, mm-hmm. right? And showing them where they're really at can, I think, help. Let's see. Here's another one. Any tips for making cash flow planning feel less intimidating for clients who are new to it? Start simple. That's what I would say, is start really simple. Just a couple of weeks out. Here's the next payroll. Here's your operating account balance. Here's what we expect to get in over the next couple of weeks. And here's the bills we have to pay. And here's the bottom line. I think that is the best way to do it. And you can just do it for them and send it their way and say, hey, look, I made this spreadsheet for you. I just want you to know this is where you're at. I'm looking out for you. So that starts the conversation. Deanna, any thoughts on that?
Yeah, the thing I would add to that too, Blake, is I think a lot of business owners come to an advisor because, once we get into the numbers, that's very far out of their scope or their comfortability or what they're good at. And so I think there's often a gap in kind of like the language that you speak, right? Yeah. The accountant or the advisor is very numbers-based and maybe speaking very high level. I'd encourage you to speak more of the same or language that your client is speaking, or put it into examples that they'll understand in their real business, because the more that they can understand, the more they'll see the value in that advisory service from you and understand that it actually is something they need for their business, or might consider for their business anyway.
And tagging on to what Deanna said, I would say don't go at it from diving into the financials, the income statement, the balance sheet statement of cash flows. I know that we love that as accountants, and we understand that, but that can be totally overwhelming to your typical business owner. So
save that for your other advising friends, right?
Right. Or your most sophisticated clients, right?
Yeah.
But like most small business clients, you can actually do a lot of that in the bank and in Relay, and that's where the multiple accounts come into play. So
I think the visual aspect there is very, very important for all types of business owners. Everybody's going to learn differently, but I think accompanying that meet them where they're at type of conversation along with a visual representation of it is very important.
Yep. That's why that dashboard is so amazing.
Exactly.
Well, thank you everyone for joining us today. Really appreciate you joining us live and your thoughtful questions. Stay tuned for a quick video about how to earn continuing professional education for joining us. Deanna, great to see you. Great chatting with you.
Thanks for having me, Blake.
Today's event has ended. To earn CPE, go to earmark.app or scan the QR code on the screen. Then log in or create your free account. Search for the course by tapping on the magnifying glass icon on the home screen and then entering the name of this event. It takes a few days to make the course, so if you're attending this event live, keep an eye out for an email letting you know when the course is available. Pass the quiz to earn your CPE, then tap the button to email yourself a certificate. Stay tuned for more events from Earmark. Thanks for joining us, and we hope to see you again soon.